All right, good afternoon. Good afternoon. You trader nerds, how you doing? Everybody fine? Everybody fat and sexy? All right, so I did a deep dive. Well, I didn't do a deep dive. I'm going to do a deep dive later on. I wanted to say kind of how October and November went, right? So in the month of October, let's think about it. This is kind of because I want to get y'all's eyeballs on this. I think it's kind of cool that we just kind of break things down. So in the month of October, we were using average buying power for the month, 24%. Well, let's compare that to November. November, we were using an average buying power of 35%. Now, why is that? Why is that? And I started thinking about it. I said, Bobby, because I talk to myself, that's what I call myself. I said, Bobby, you good looking son of a gun, you. Why would we be using more buying power when the VIX was doing this? So I went to VIXy, and VIX was doing this, and I go, okay, still. So VIX was going down, but I'm using more buying power. Hey, so it kind of makes sense though, right? Because remember, it was October the 15th when, why are you torching the baby, you sweet Bobby? There you go, Twain. So, you know, it was October the 15th is when we started saying, hey, let's start taking these things to expiration. Remember when, you know, Stacy was yelling at us, and then I went to the band concert, and then we came back on the 17th. This is where we started. So we've been letting these things go on. So that's why our buying power increased, right? We haven't been closing trades now. I think that's probably why our buying power went up. Okay, I can get that. VIX going down, market going up. We increase buying power because we're not closing stuff. So we're putting more and more positions on. So that made sense to me. So let's go back. So my total theta for the month of October, you know, I took my daily theta and estimated it on the weekends, was about $1,300. About the same for November, right? Total theta for November was about, you know, $1,100, a little less. So total profit for October was $1,400. Now that's profit, not realized profit, that's profit as reflected by our net leg. And the profit for November was $470. Okay. So I started saying, okay, is there anything that I can glean from this information? So one other thing that I want to look at is I want to look at total premium sold during October and November. So I'll calculate that today. I want to see the total premium I sold for October and November, just kind of see what that was. Now, the interesting thing that I then went to the spreadsheet and said, well, how many trades did I actually close in October? All right, so remember, this is when we were doing the full 111s, right? So let's see where we exited. All these are August, November. So how many did we actually close? Okay, here we closed one. That must have been the calls, right? That was the calls. We took the, yeah, no, the calls on the other page. So we closed the 11117 for a little bit, a 262 till 10-4. I don't remember us having an issue with that. Okay, but it says 10-4. Okay, so we closed a $262 loser. So 2, 3. So we closed 3 complete tranches of the 111 in October. How many did we close in November? We closed 1, 2, 3, 4, 5, 6 complete tranches. Okay, so we closed a double the tranches in November than we did October. We didn't really close a lot of stuff in October, y'all, or November. Watch. We closed exit day, 1 trade in October, 1, 2, 3 trades in November. Look at this, y'all. Here's those calls, right? Here's where we did the calls and we closed those. But really, as far as our puts go, I mean, we didn't really close anything. So that's kind of interesting to me, right? That, yeah, she does need to learn this. That's right. Your baby needs to learn this. It's very cool. So it's kind of cool, right? That, what if her first words was sweet Bobby? Huh? Sweet Bobby. Let's just keep saying it over and over. Sweet Bobby. Sweet Bobby. That'd be sweet. Or just call Bob Bob, Bob Bob. And y'all think she's saying bottle, but no, she's really saying Bob, Uncle Bobby. So we didn't close a lot of stuff, y'all. So we've got basically unrealized stuff. Now, here's the thing. I want y'all to watch this though. So now we don't have any full ones to close. So then my mind starts racing and going, Bob, what would you be closing this month? I will be closing. Look at this. Look at all the stuff that's going to come off in October. Look at that. No, no, not that's coming off in October. That's not what I'm saying. That's coming off this month. I mean, December. All this stuff, right, is coming off this month. Oh, be still my heart. Oh my goodness. Then we can go down here. Look at this. We got all this stuff coming off in 30 days. So we only got 2 things that we put in the 51 day. Wow, look at that. So this is interesting to me. This is very, very interesting. So we have 2 expirations that will be coming off this month. So let us now go to the Analyze tab and let's look at it, shall we? So let's get this account. This is the smaller account that's got the cool spreadsheet that shows us all the cool stuff. And let's just see what we got going on. We'll go to the Analyze tab, MES. So we got 1 expiration. We're going to hide simulations and we're going to go, I said, single symbol, right? All 3 series. So let's go. This is 1 expiration. Let's come back to where the money is. Right here. Okay, so here we go. Right. So let's just look and isolate our stuff that's coming off in this next expiration. This is it. This is where we're at. So this should give us, today is the 1st, and there we go. So this is the stuff that comes off in 16 days, right? So we have $493 profit. We're going to make another, $30, right? Another $30 on this expiration. So that's going to be realized profits, right? We're going to make $30 unless we get a big pullback. And then we have a chance to make, mucho money, right? We make $2,000 on that expiration, which will be kind of cool. All right, so what happens on the second expiration? So let's look at the second expiration. Let's go 2 series. Where we're at. So here we are now, right? So we should be able to make a total on the 2 expirations of, right now we're up 975 on them. So we should make, 200 or so, I guess, on these 2 expirations. It's kind of cool, right? To kind of see this in action. What if you just isolate that one altogether? Let's see. This is just the second expiration, the 30-day expiration. Right, so on this, we're at 480, we could be up 602. So I don't know, just interesting ways to look at, how we're going to be doing in the coming days. Now, if we put all of our stuff here and do all of our stuff, here we are. So right now we are up 975, and by the 17th, we should be up to 1192. Let's add 2 expirations, which will take us through the end of the month. Here we are. So now we're up 974. We should be up 1192. This says 11663 on that third. That's interesting, isn't it? Let me see where that one is. That's the little pink line here. It's building up here. Okay. I'm just trying to make sense of it all, right? I'm trying to make sense of it all. Because, as I sit there last night, I go, it was kind of, I don't want to say that I was bummed out, but I was a bit disappointed that we substantially underperformed the market. I really was. It just kind of hit me the wrong way for a second. And I said, God, Bobby, you have, I don't know, 2 months in a row, we've underperformed the market. But then I got to remember, and then I said this to myself. I said, but Bob, in 2 months, you have made a 7% return, right? So we've made 7%, or what was it? Let's get it exactly. Let's get our little thingamajig. So we have made, I love how we're able to just do this, right? So we made 5.46 and 1.74. So 5.46 plus 1.74. And y'all know how I like to annualize stuff, right? So that's over 2 months. If you can make 7.2% over 2 months, and you multiply that by 6, right? Because that'll give you 12 months. I mean, that's a 43% return. Plus, we know we're going to do substantially better if the market were to go down a bit. So I kind of like that still. I don't know why I would ever go, what if you just make 1.74 month? Well, times 12, that's still pretty good, right? That's 21%. I mean, you take that any day. So we're still doing good. It's just when you say, oh man. So this kind of got me going and thinking about Hold on a second, let me find it. Did y'all see Charlie Munger? Y'all know who Charlie Munger is? Isn't that his name? And what he talked about on envy. I should have had that pulled up. I wanted to show you all that. Let's see. Let me see if I can find it. Oh, Charlie here. Charlie Munger. Envy, not greed. Yeah, everybody's going nuts on this on Twitter. So let's see if we can find him here. Yeah, so let's just listen to him just a little bit. Let's see. Where's the short of it? Yeah, here it is, minute 17. So let's play this little video for you. Try to hear this. Because this is one, in trading circles, we always hear fear and greed. But y'all have heard me, right? I've said it's fear, greed, and envy. And so it was kind of validating to hear.
The world is not driven by greed. It's driven by envy. And so the fact that everybody's 5 times better off than they used to be, they take it for granted. All they think about is somebody else having more now, and it's not fair that he should have it and they don't. That's the reason that God came down and told Moses that you couldn't envy your neighbor's wife or even his donkey. I mean, even the old Jews were having trouble with envy. And so it's built into the nature of things. It's weird for somebody my age, because I was in the middle of the Great Depression when the hardship was unbelievable. I was safer walking around Omaha in the evening than I am in my own neighborhood in Los Angeles after all this great wealth and so forth. So, and I have no way of doing anything about it. I can't change the fact that a lot of people are very unhappy and feel very abused after everything's improved by about 600%, because there's still somebody else who has more. I have conquered envy in my own life. I don't envy anybody. I don't give a damn what somebody else has. But other people are driven crazy by it.
I thought that was cool, right? So it's kind of interesting. Now, it's easy for us to say, well, Charlie Munger, he's got billions. So, he's to talk about envy. But you still need to realize that it is an emotion that you and I must overcome. So, just because we underperform the market, underperform the market here, you can't say, oh man, I got to give up. I'm giving up. No. We have a strategy that should outperform the S&P over the long term. I really believe that. If you want to rev it up, use more buying power, take more risk. But I think what we've got now is pretty good, throttled back, and we can make a nice, decent return in all kinds of markets. So don't be envious that the market was above what you were able to perform. Right? Don't take it personally. Don't look at your neighbor who made 18% this month and go, man, I wish I was that guy, or I wish I was that dude. Because if you do that, what you're going to do is you're going to derail your success. You got to see that. If you start chasing performance and you've got something that's solid, you and I'm talking to myself here, we will beat ourselves up and we'll start saying, well, I'll just abandon this and I'll go to something else. So that's why we lost a few people before with the 111, because they experienced some losses, right? That's going to happen over time. I think we've got a really, really, really strong program here. So everybody kind of chill out, calm it down, evaluate this stuff. It's really cool to look at the metrics, though. I love the metrics. I love looking at, hey, we've got a positive expectancy of all of our trades, even the put debit spreads, because it has to count those too, right? But our positive expectancy on all of our trades is $40. That's nice. We've got a win rate of 90%. Now, y'all, if we were just counting our naked puts, the royalty behind the pawns and the bishops and the knights and the rooks, that's going to be probably 98%. So this will go down now that we're counting them separate. Now, what Ed's going to do, Ed is thinking about not even recording his put debit spreads in his spreadsheet. So he's just going to record his nakeds unless the put debit spread goes into profit. And that's fine too, if you want to keep just the metrics on that. I guess, I told you I wasn't gonna mess with the spreadsheet anymore. I guess I could keep up for the win rate on them separate. Who knows? Forget it. I ain't gonna do it. It's stop it, Bobby. So, I think we're still in a really, really good place. It's just
Save it for when you're on vacation.
when I'm on vacation, exactly.
Then you can hack that spreadsheet.
Yeah. So, right now though, I think we're good. We're in a good place, right? I don't need to strain my brain during the Christmas break. We're all good. I think we're all really, really good. So, it's just, I don't think there's a need to change the plan. I think we're on track to make 20 to 40 something % a year. I really believe that. So let's see how it plays out. It's too early to tweet. Now, I have developed a hypothesis, and the hypothesis, I am so scared to tell you about it because I don't want you blowing up stuff. My hypothesis is that the put debit spreads do such a great job of neutralizing our delta. The put debit spreads, I don't think you're ever going to get your deltas out of whack. It does such a good job of this that I don't know if I'm not comfortable with going up to 50% buying power at all times. So that's my hypothesis. My hypothesis is, Bob, I would never do my theta over 0.3 at this volatility level. But at the same time, I think I'm comfortable maybe pushing this up to 50%. Now, I don't want y'all to do it. Let me be the guinea pig. And I'm not comfortable doing it on my $100,000 IRA either. I think I'm more comfortable in the $27,000 account, because if I blow out the $27,000 account, I'm okay. I can do that for science. I'm good. I just don't want to blow out my 100,000. So I may push this a little bit, but I don't know that I need to. That's the thing. But I'm just saying, if that's kind of the hypothesis. I think if you want to push returns and you're an aggressive trader, yeah, I think you could probably go up to 35%. Now, let me ask y'all a question. We are going to do a deep dive, and we're probably going to do it today about 2 o'clock. And I got to say who's going to be in this session. Hold on. Our last Muscadine Mafia session, was it for just Muscadine Mafia or was it for everybody? I can tell by what I've posted here. Hold on a second. My Muscadine Mafia, there's our spreadsheets. The last one that we had was, where's the darn thing? Where's our last Muscadine Mafia? Good Lord, at the chat going on in this Muscadine Mafia. Yeah, here it was. So November the 21st. So that was last week. That was just for Muscadine Mafia, right? So at around 2 o'clock today, we're going to have another session. We're going to come back. So this will be for Hello Ladies and for Muscadine Mafia today at 2 o'clock. So if you're in the Hello Ladies or Muscadine Mafia, let's get it back at 2 o'clock, because here's what we're going to do today. We're going to go and do a deep dive on the analysis tab, and we're going to look at diagonalizing the put debit spread closer to the expiration and doing the thing. So I don't know how that's going to look. So it's not going to be an entertaining session. It's not going to be really, it's going to be a deep dive, and let's go to the analyze tab and let's see what it looks like. And let's just go day by day and see which one, offers us more protection. I think that's going to be cool. So can we do that at 2 o'clock today? That'll be awesome. Ed, are you in here? Ed in here?
Hey, I'm here.
Hey, Ed, would you post a thing in at everyone and say that at around 2 o'clock, we're going to do a Muscadine Mafia session. It will be recorded for Muscadine Mafia and Hello Ladies people. Will you mind doing that?
I'll do that right now.
Thank you, Ed. That'll be good. I'll get everybody a little heads up. And we'll record that too if you can't make it live. All right.
2
But we'll do,
2 p.m. Eastern, right?
yeah, 2 p.m. Eastern. So we'll do a deep dive on diagonalizing that. That's going to be cool. All right. So without further ado, let's see how we're doing today. What is the market doing? You want to look at the market? I haven't been looking at the market a lot intentionally because I don't think we really have to. Y'all don't have to predict anything. Oh, we're down a bit. Okay. That's cool. So let's look at our big green monster that we've got to redraw. Oh, we won't waste time drawing it today. I'll draw it at some point, but let's just kind of see what it was looking like, because this thing is so cool, right? Yeah. I mean, it looks like it should. It probably is going to fill these. It's probably going to go up around here And that'll probably move when we get it, but well, watch me move the thing and it'll be right here. It'll be like, that's where it's going by. But this thing is so cool, works so awesome. So I'll draw that later on today. All right. So mark us down a bit. So let's see how we're doing today. It says I'm down $34. Oh, be still. Let's go over here so I can hide the account number so I don't get in trouble and see if we're up or down in this account. So saying that we're going to be down, let's see if we are. I'd love to play the Jefferson. So it is 36. Where's it at? 942. There we go. 36. Uh-oh. 12, 1, 22. We just thought it was down. 36, 942, 37, 942.37. To me, that looks like we are up, baby.
Well, we're moving on now. To the side. To a deluxe apartment in the sky.
So we have made, since we started recording this, so what, month and a half? We have made $1,400 or $1,500 in this account. That's pretty good, right? So, now here's one thing that kind of caught me off guard. This account, whereas my other accounts was like 1.74 and 1.65, this account always seems to outperform the other two accounts. And I'll tell you why I think it is. I don't tinker with it as much. I don't tinker with it as much. The other ones, for some reason, I'll tinker with.
But Bobby, you're right. You're absolutely right. And my accounts that I'm with every day,
Yeah.
my performance is half of the IRAs and the other accounts where I go slow.
Yeah.
It's crazy. It's where it seems like the problem with my trading is me.
Yeah, it's me too, right? You kind of, because in this account, remember, I don't record the trades. I don't even put them in here. Screw them. Who cares? I don't care about the trades. And, on the other ones, I'll be like, oh, I got to close this one or close this one. And on this account, baby, I just let it fly. And it does better. So I could get 2.5 in this account. So let's say, okay, so 1.74 in the other account will give me 21% a year. Okay, but without tinkering, I would have got 2.5 times 12, 30%. By just not tinkering. Now, what does tinkering mean? Oh, I'm going to close part of the put debit spread, give me a little more insurance to the downside. Well, I'm going to take this one off. And I looked at my orders over here. I went over and I went and looked at all my orders over the last 30 days. And y'all, I didn't have all that stuff. I did not have all of these closing trades. There was not a single trade to close. All right, see these over here. Let me make sure I pull them to the center where you can see them good. You see these BTOs? There was only a closing order on the calls. Look at those BTO, 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 BTO. Where's the dadgum? I swear I closed the calls. I thought I did. I thought I had calls over here. I thought I saw it last night. Maybe it's in there somewhere. But y'all see these sell to open, buy to open, sell to open, sell. Oh, here it is. Sell to close, right? And that was calls. See, call. That's where we close those calls. So as you and I are learning, the best thing to do is just don't do anything, but put your trade on and stop over managing. So the only difference could have been maybe I paid a little bit more commission than one, but that's not it. So it had to be that in the other two accounts, well, I closed a debit spread, or I closed a little short, give me a little more buying power, and I moved something out. Don't do it. I'm telling y'all, just put the damn trade on and sit on it. That's what we got. Unless you get a warning sign telling you that, hey, baby, we got to do something. I don't know how I make it more clear. And I'm talking to myself. I'm not fussing on y'all. I'm not fussing on you. I'm fussing on myself. The account that we don't tinker with always does better than the account we tinker with. So what am I telling you? Don't record your trades? Maybe that's what I'm telling you. Hey, Evan.
So you're asking, or you're saying that you are doing better in the account you don't tinker with. Are you referring to taking off your trades at 99% profit? Is that what you're talking about when you say tinkering?
Yeah, that's what I was, that's the only thing that I did different in the Thinkorswim accounts was.
So two questions then, if that's the case. You're taking these off. I know you're being very, very, you're trying to capture as much of your profit as possible, right? So if you're taking these off at 98 or 99%, would that extra 1 or 2% really make a difference? Be my first question. I don't think it will. And then my second question kind of goes to, Ed's reasoning behind originally bringing this up, and that's the notional risk. So if we have a month where we just drop like a rock, and now you have that much more risk on, do you still think that this account that you haven't tinkered with would outperform the one that you do by taking that risk off?
And that's a good question, right? That's a good question. And that's why I kind of like, and I don't want y'all to do it, right? So if y'all are trading 3 or 4 accounts, I don't want y'all necessarily doing it. I love being the guinea pig. We appreciate Evan stepping up to being the guinea pig on the call side, and he reports to us, continuously about how that's going. So, but I'm really afraid about you guys, tinkering too much and changing your plan. So yeah, you're right. I mean, if we had got a huge down day yesterday, there's no doubt that these accounts would have done well. It's just that I think in the long run, it's probably, maybe you do kind of a hybrid in between, right? Maybe you just tinker, close one here. I just think that it's better left to go to expiration if you can, unless you're getting hey, Mayday. So now, but you got to be comfortable with that. That's the good thing. This strategy is so unique in that you can make it yours, and that's why I'm telling you, you have got to write your plan down. You have got to know what you stand for and what you will do. So if your plan is to take them off at 99%, that's great. So here's the cool thing. So if your plan is to take any naked put off when it's at 99% profit, do that. And then how about this? At the end of the month, why don't we start comparing notes as a community? If y'all don't mind, I'd love to hear, you say, hey, Bobby, you got 2.5% in the Tasty account. I got 2.75. Here's the only thing that I did different. So we have the metrics that tell us what to do. So I kind of like to know what you did, because some of you may say, hey, I'm going to run my buying power up to 50%. I'm comfortable with it. Because we know if we get in trouble, we know how to handle it. I think we can do that. So I would like for us to compare notes. Hey, we got a great question for you, Evan. Stacy wanted to know, because I think this is great for us to all know, how did your call side do yesterday on that big move up? You mind telling us how it kind of worked out, or what it probably not?
Yeah, so I was actually just looking at that, trying to get an answer for. So I have a total of 1, 2, 3, 4. It looks like I have 4 calls on right now, and of those 4, I've got 3 that expire in 29 days, and those are all basically break even. One of them is down $47. And then I have 1 that I just put on a couple days ago. I want to say within the last week or so, and it is down about $180. So that one's feeling a little bit more pressure for sure. But overall, since I've started putting these on, these 112s on about a month and a half ago, they're all still, as a whole, they're all still green. So,
so the entire call position is green, right? So if you put the nakeds with the call debit spreads, it's all green.
Oh gosh, give me just a second here. I was saying in general, the entire portfolio.
Your
calls
entire
and
portfolio.
puts.
Okay, I see. Your entire portfolio is green. Stacy said she was hoping you had one close to expiration where your debit spread was looking good, because that's gonna be the great thing about it, right? Is you'll have the whale on the call side.
Yeah.
But that's fine. You don't have to give us, specific anything. It's just kind of cool to know, right? That we kind of know. what-
Yeah, I don't mind doing it. It just takes me a second to kind of figure out what's where, because as you know, there's a few positions on here.
Mhm.
Oh, you know what? Here, give me just a second. You can go on
Yeah.
to another train
Yeah.
of thought here, and I'll get back to you in a second with a
Okay.
better answer on the calls.
So let's go ahead and enter our grades for this account, see what's happening here. So our delta is 23. That's incredible to me right there, that we got delta 23, theta of 56. Boy, look at us keeping delta and theta ratios, 23 and 56. 23, 56. Boy, we lost a lot of theta, didn't we? And I don't know what the X is, surely it's 20 or so. I'll find out on my other one in a second. So we're halfway throttle to where we should be. And our buying power usage is down. So we lost a lot of positions that went off yesterday. So account Bob, our buying power is 11,941, 32%, 11,941. So what am I going to do today? I'm putting a trade on, baby. I'm going to push it. Bobby, you do know you at 32%, my friend. I got you. But this is what I do, right? This is what I do. I put on risk. So let's go do it. Boy, do y'all love this? I swear, y'all, I sit there at night and I just lie in bed and I go, this is just awesome. I just can't wait to get back with y'all. I mean, this is just so fun to me. I hope y'all are enjoying the strategy and the discussion and throwing out different things. And you ain't got to do it my way and I ain't got to do it your way. And we all kind of got our little thing going on, just kind of cool. Hope y'all enjoy it. I know I do. All right, where else can you do this stuff, by the way? Is this 62? These days never go. Let me see what the days are actually here. Make sure I'm trade over here. These update better than Tasty. Oh man, wasn't Dr. Jim great yesterday? I just love that. I just love that. Okay, so 50 days. Just love Dr. Jim. He's so cool. He's one of my favorites. I'll tell you who else is my favorite. I'm gonna get her in here too. And I love Julia. After meeting Julia, that is an impressive young lady. She is, she's like, whoa, she's a smart boy. I'll have to get Julia in. Look at this. All right, so, but I hate just bringing people in to look at our stuff, right? We just bring them in and, bring them in and, hey, we want you to look at our stuff. Maybe they won't talk about something else, but I kind of like Dr. Jim looking at our stuff, and I think he was very excited too. All right, so let's put on a trade at 50 days out, even though it says 51. So what do? Long put vertical, 50 points wide. And I like what he said too, and that's what we're going to kind of figure out. We'll play with all kinds of stuff in our session at 2 o'clock today. I'm really excited about that. I don't know how it's going to go. I mean, I don't know exactly how to model it. We're gonna play with it though. Look at that, y'all. 1025. So if I go here, I got to the gym today. It was my personal trainer day. Normally we do it on Tuesdays. That little gal weighs 115 pounds and she just kicked my tail. Oh. But I was laying on that little bench and she had me doing something stretching behind my back with a bar dumbbell or something. And y'all, I'm telling y'all, I heard something crack. She said, "Are you okay?" I said, "I think so." I'm not exactly sure, but Lord, goodness. I mean, she's stretching me out good. It's really good. I'm so proud. And I've noticed that I'm not as pear-shaped as I was. It's like I actually got, my waist is like smaller than my stomach now, which is kind of cool, right? Because that's never been the case before. So I said, hey, I looked in the mirror and I go, I'm kind of not a pear-shaped. All right, so here we go. We got that in there. So now let's go do our nakeds. Naked. At about, where you can go. Yeah, I could see totally not tracking your trades on the spreadsheet may even help you. But, the only reason I do is I like the data, right? I like getting the data. And so we can, make heads or tails of it, but you don't have to. All you got to do is use that Greeks and ratios tab. You should be fine. So let's make this less advantageous for us so we can get filled. There we go. Let's go over to the right. Isn't it cool though? I hope y'all are like really getting into I don't care about JPAL. I don't care about, Putin. I don't care about all this other stuff. It's just so fun, right? You don't have to worry about everybody else and their mama, these zero DTE traders, and I love them. I do. But they're just, they're scared to death. Oh, I can't do zero DTEs on a whatever day. Okay. That's fine. We don't even worry about it. We just like, hey, give me some movement. We need movement. Give me movement up and down. Yes, here we go. So we are at 27.59, 27.520, 27.521, 27.521, 27.521. Y'all know what that means? Praise the Lord.
Well, we're moving on now. To the east side. To a deluxe apartment in the sky.
All right, so we are at 9 deltas and 28 thetas. How about that? 9 and 28. 9 and 28. I just love the spreadsheet. I mean, y'all really, it is a work of art. I mean, I don't know how I don't receive like some Nobel Economic Prize or something. Okay, our VIX is 20. That worked too. That's good. See what our little buying power is over here. 95.68. 95.68. My doctor gave me some different medicine yesterday. Oh, did I tell y'all I don't have to take any insulin now anymore. He cut my metformin in half, and he gave me a new testosterone. I was taking Jatenso for testosterone, but my Jatenso it didn't get it. So now I've got some shot that I got to put in my belly. And I'm used to putting shots in my belly with my insulin. So I just replaced my shot from my thing to my testosterone. It's gonna be kind of cool. I'm looking forward to that. And Ed, he gave me something for my psoriasis, which is really good. Okay, y'all, I ain't got to do nothing. Y'all see this? Oh, sweet Bobby ain't got to do nothing. But I'm gonna do it because I'm at 34.7 and I could be at 35%. I'm going by my rules, y'all. Now, this is the account that I may stretch. This is the account that I may say, no, man, hey, if we blow it out, that's fine. But I kind of want to see y'all to see an account get tested, right? I kind of want y'all to say, now, it ain't like we ain't been through it before. How often do I show y'all this? I'll show y'all again if it's your first day. He's sitting there going, Bobby, I don't know if I could handle 94% buying power. Hell, we done went through it. 70, 72. It ain't like this is nothing to us. Right? Hey, we're fine. We survived that just fine. So now, I don't know what we started out though. Let's see what we started out with. How bad were we? 30%. So you can see we got in a bad place really quick. Look, our second day of trading, we were above where we should have been. That's so funny. So it's not like I'm scared of it. Right? There's nothing. I have really conquered fear and greed. The one that I do struggle with a little bit is envy. The market did this. Why did we do this? I do struggle with that. Now, I don't struggle with comparing myself to other traders. It's more of a competition with me in the market. But if we could return 42% a year consistently, 20 to 42%, y'all, we're the greatest money managers on the planet. Y'all understand that? That's why I refer to us as the turtle sometimes. Y'all remember the turtle group? You need to search turtle traders. You need to search those guys. There's a group of folks that kind of come up with a strategy. It'll work. I think the edge of it left. I don't think our edge will leave, y'all. First of all, we could publish this in the Wall Street Journal, and I doubt 100 people would do what we're doing. I mean, it's so different. I mean, it's just different. Most people just like to sling trades, and buy calls, and buy puts, and see where it goes. All right, so I'm gonna put a trade in. So let's do that. I won't record it though. Take your time up. So let's go over here in the Crimson account. I'm gonna trade 50 days, and we said we were gonna sell the two of the today. All right, so we're gonna sell two of the 35.50s. Yeah, so give me something for my psoriasis. I think I told you. Even though I still, that cream Ed gave me is working really good. 35.50, two of those. Sell two of those for, let's see if we can get the mid price, $12.50. No, nothing, dagnabbit. Baby. It's a place. Yeah, Charlie Munger's good. Boy, I tell you what, those people on Twitter though are beating him up. Yeah, it's easy for a billionaire to say, you know, that son of a gun. I don't know. See, they have envy. They're envious of him for being the billionaire. You just can't compare yourself to anybody. And I used to do that, right? I used to be so scared to walk into a room. You know, you're like, oh, I'm not as good looking. I'm not as charismatic. And then the older you get, you're like, I don't give a crap if you like me or not. You know, screw you. I'm just going to be myself. That ain't my sister. She's got to fit in. You know, her kids, shouldn't say this. Y'all remember Tootie from the Flat Facts of Route Life? My sister's kids go to the same school with Tootie from the Facts of Life. You know, the Facts of Life, you have Mr. Garrett in it and everything, the Facts of Life. And had, anyway, and she's like, Tootie goes there. I'm like, and? She's like, well, you know, she's a Hollywood celebrity. Unbelievable. I'm like, listen, she wipes her butt like you do, Chris. I mean, she's, you know, ain't no different. So I got filled on that, so we got this working. You know, don't be so enamored by. Now, of course, I was a little enamored by Tom Sosnoff because I didn't tell him that I was staying in the La Quinta Inn. Hey, where you staying, buddy? Where you at? You know, I said, just out there. I was a little embarrassed to tell him I stayed in the La Quinta because I didn't want him to think that I was, you know, so fancy staying in the La Quinta. All right, so here we go. Now, what did I do? Okay, I got those trades in, so that's fine. So let's go look at the, what do you call the IRA? See how we're doing over here. 11, oh, that's 12. I guess we're all a little prone to that. So over here, we are at, come on, let me play the Jeffersons one more time. Come on, 105, 832. 105, 832. 105, 832. Y'all know what that means. We made $100.
Well, we're moving on now. To the side. To a deluxe apartment in the sky.
All right, so when we would expect to make about $100 a day, right? So our deltas are 34 and 89. 34, 89. 34, 89. 89. Look at this, y'all. I can't get enough gas in the tank. I just can't do it. Dag it. I keep going backwards in this account. And this is the account that's up 1.64%. So what do? I tell you what I'm going to do. Well, let's see what our buying power is first. Buying power says maybe you don't need to do nothing. 36,400. 36,400. I mean, we're at, you know, so that's the problem. Then you got competing things, right? We're at 35%, but we don't have enough gas in the tank based on our net leg. That's why I was thinking that we might can push them a little bit, right? So if this is blue, I need to say, well, screw this. You know, we'll bump this up a little bit to get enough gas in the tank. So I think I'm gonna put on a trade over here, wouldn't y'all?
Was this your account that performed better or worse?
This one is the one that performed worse. And let's look why. Now, not much. This one was 1.65 compared to 1.74. So it's not a lot. But as you can see, I have struggled to keep gas in the tank, right? I have struggled to keep gas in the tank. So, but then you go with a strange issue because I don't have enough gas in the tank, but it's saying, hey, I'm kind of maxed out on buying power. And that's why my thought is, should I bump the buying power up and be a little more comfortable with that, especially if my theta is so low? So if my theta were this and this was like 25%, I know what I do today. I put on 2 tranches. But now, just seeing that I'm so close to 35, I'm like, I don't know, man. Should I put on 2 tranches? I really need it over here. But over here, I'm kind of maxed out. That's why I'm saying, is 50% the number that I should go? I don't know. Well, I gotta write that down in my plan. I gotta figure out where, and we'll discuss it, talk about it. But I definitely know I need 1 trade here today. So let's go get it. So let's go to the Crimson account and let's get our field orders. So let's get this one, create a duplicate order, and if we get filed at 10/25. Confirm and send, change the account to Bobby Beth. And let's send it. Send, baby, send. Fill me, darling, fill me. All right, so let's go to the other one. Let's get our nakeds and give that one, we'll pull an ed on that. We'll let that one kind of work for a second. Let's go grab this puppy. Duplicate order. And it's at 12/25. We'll try to get that. Confirm and send, change your account. And send. Come on, baby, fill me. Hit me with your best shot. Jack, squat, crap. All right, so cancel replace. Remember, these have to be in quarter increments. That should fill, and it does. So I got my put debit spread. And let's sell this, make it less advantageous, so we will get fills. We'll go down to $12. $12. And we're done. That justifies staying at the La Quinta. That's right. Oh yeah, the Millionaire Next Door. That's a great book. Great book. Right. Where Thomas Stanley basically found that, the average millionaire, wears blue jeans, dresses regular like regular folks, and drives no pickup truck, probably 8 or 9 years old, an American truck, probably a Chevy or a Ford, and he's an auctioneer. And that's about it. Probably owns a cow too. That's who they are. That's the millionaires. Now, here's what I would recommend to y'all, right? As you acquire wealth, don't let nobody know it. Don't let nobody know that you got no money. You know why? Because they come to you and they want your money. So I recommend going to your relatives every now and then and ask them if you can borrow something. That's what I do. I go to them, I say, hey man, I ain't got enough to get through Friday. Can y'all spare something? Give me, what I'm saying? And they look at you and then they won't even come around you. If you have relatives that you don't want to be around, just ask them to borrow some money. And then they think that you pose dirt. So they don't come to you. They don't ever ask you for money. That's a great thing, right? Like, I don't know. That's just my opinion. People do their own thing. Oh, we got hands up. Reverend Ken, yes. Reverend Ken. Ed, you got your hand up?
Yeah, I did.
Oh, both of them. Go ahead. Ken, yeah.
I forgot when I was typing that in, trying to figure out how to raise my hand. I forgot the point, but I just want to, in general, though, I put it in the main chat. This is, if you had to have only one recording of Bobby's daily Zooms, this is the one to keep. And the reason for it is it didn't have a whole lot to do. It had to do with trading, but underneath it, the themes of how you conduct yourself and your attitude about money and things like that is worth more than any other kind of education, because you had said it earlier, and I've said this for years. There are people out there who, if they could get tomorrow's newspaper today, they'd still lose money in the market.
Yeah.
And so you're right. I used to keep, I came from a culture of keeping secrets about trading techniques, and not a single one of them was worth a tinker's damn, because everything falls on you, the individual. And it's just, this is a great session, Bobby. And I wish I could remember the point why I raised my hand, but there's so many good things to point out. And I'm going to shut up now.
Oh, well, thanks, Ken. That's awesome. Thanks so much. Hey, Ed.
Hey, good
I'm not used to
morning.
Ed raising your hand. Why all of a sudden y'all raising your hand? Just
Well,
'cause
you
Ed
know,
raised
I'm
his
just
hand?
trying to follow with the examples of youth. You know, when youth is polite, I feel like the elderly should be polite.
I guess so. I mean, Evan's like, he's teaching
Yeah, I'm
us things.
motivated by Evan's politeness. Now, I have to say, I waited like 15 minutes and put my hand up and down a couple times trying to get someone's attention. So I'm learning my little lesson as well, a little bit of patience.
You were on a
Look,
roll, Bobby.
Well, thank you.
What was
Ed. I mean, thank you, Ken. I appreciate that.
I said, Ed, I was saying Bobby was on a roll. I didn't want to interrupt him. It was
Well,
great.
and you know, that's part of it too. I don't want to interrupt that. So anyway, a couple of things. One, Dan posted, this was like when you were saying, put them on, take them off. What do we do? Let's think about it. So Dan at 12:39 posted that he routinely takes off. It's kind of, and I'm not mentioning him, and then he leaves the put debit spreads on after you read that. When it's part of, and he doesn't say whether that's part of his plan, but I suspect it is. When it's part of your plan and you enter a tranche with premium captured that you plan on using to exit part of that tranche at the tail end, it's planned. It's not like you put it on and you get an itch. And one day, like, I'm taking all my naked puts off that are $1 less or less because I have an itch. You know, like it's in your plan. And although I have a range where I'm taking mine off, and Dan may or may not have a range where he's taking, and others are doing the same thing. I don't know how many, but others are doing it. That's what I'm trying to firm up, exactly what price do I want to take it off. I'm allowing myself $1.50. I'm typically doing it for less than $1.50. And I immediately go on, put additional risk on, like Dan is doing. So, and his thinking with what, I don't know if you actually read it or not yet, but he basically put a trade on with, X number of days, got out of like 57 days and got out of it in 28 days. And he'd rather take off that remaining 10% of the trade or 15, whatever the percentage. I'm generalizing what he's doing. And put that buying power to use in a higher credit further out so that it can start decaying at probably a similar rate, very similar daily decay rate at that point, but there's more premium to decay. Okay, so here's Dan. Correct. It is my plan. I'm pulling the naked put at 90%, keeping the put debit spreads and redeploying. And that's basically what I'm doing. I'm doing it at 90 to 95%. I'm pulling. So I am kind of still touched by the notional risk of what we're doing. And it puts me at greater ease when I take off 2 contracts and put 2 contracts on. I have the same ultimate notional. Now, I know the dynamics are not exactly the same. I know the brand new position has a much higher chance of badly going against me than the one I'm taking off, that's 90+% done. So I'm not saying the risk is comparable directly, but I am saying it's 1 contract for 1 contract or 2 contracts for 2 contracts. So if all what breaks loose, the tail risk of both of those is probably going to be fairly similar. I mean, I realize the newer ones will blow up more, but I think as you take those naked puts off and you leave the put debit spread on and you put new risk on, and then a week or 2 later, you're doing the same thing over and over and over again, you're also building up a bigger pile of put debit spreads, which I think are going to enable us, just like the Sweet Bobby hedge, once that we get a campaign of those rolling, these things are going to cushion our accounts and probably I think you're getting an urge to raise your buying power because your other metrics aren't stretched when your buying power is. So you're thinking, well, my other metrics aren't stretched. Maybe I need to stretch my buying power higher. Maybe I need to adjust that's part of the think tank thing that we're all doing here. So I don't have the answer, but I do think that there's some validity. It's got nothing to do with fear. It's a better allocation of risk capital in my mind. So I just want to throw that out there. And then the other thing is, and you said we're going to talk about this later, the diagonalization of our 112s.
Uh-huh.
Okay. And I'll save my main bullets for that, but for those that aren't going to participate or can't participate in that, I do want to throw out a little bit of reasoning why we're about to look at that. And that is, once we get a big campaign of these put debit spreads in front of us, and we're doing our 112s and we're doing them and we're doing them, and we have a certain amount of unattached put debit spreads that are there to help protect the portfolio, then over time, I don't think it's as important to put on like the put debit spread and naked put at 53 days. I think you could put on a naked put at 53 days. I mean, a put debit spread at 53 days and a naked put at like 61 days. Now, okay, for 6, 7, 8 days, whatever, I don't have put debit spread protection for that trade. But I know in all reality, when I get down to less, more than a week, it's going to be 2 or maybe 3 weeks left. That naked put most of the time is going to be worthless and able to be taken off. So it's not going to really have hurt me to have a put debit spread on that is younger, less DTEs when I first put it on than the naked put. The other thing is, as we put on a campaign of these things, the campaign is what's protecting the naked puts, not that one put debit spread. And in fact, and I've said this over and over again, the brand new put debit spread is an infant. So it's not serving any purpose really for the portfolio in a big way until it gets much closer to the DTE. So one, we have a campaign of these things. 2, the younger they are, the better, relatively speaking, because those are the more protective ones anyway. So we'll go into this a lot more in this afternoon session, but because you're alluding to it a little bit, I did want to throw out there what the basic logic of this examination is. And again, it's an option. It's not something you have to do. You can just keep it all simple and not worry about the diagonalization. That's where I was months ago. Now I'm really not seeing the point of doing that. I mean, I can pick up an extra 1.5 plus by just stretching an expiration out a few days or a week. And if I do that 80 times a year, that's going to measure up to a lot of money. So that's kind of where I am on that. And I will be.
Wait a minute, say that one more time. I was putting my son's Black Adam costume on. JoJo's still sick. So what was you saying?
Well, I'm just saying when you diagonalize like if I do a 112 today, I did one yesterday, I diagonalized it. So I actually put it on for $12.50, but I could put my naked put further away.
Right, and collect the same.
Because I'm not spending as much on the naked put, on the put debit spread. So that allows me to push the naked put further out and capture net the same amount of premium. And honestly, even in my mind, if I just had that one position and no other protection on, one, I might be a little edgy because I got a naked put that's got no put debit spread protection on, which is somewhere that I don't like to be personally. But 2, I implicitly know by design of this trade that before we hit, the 20 DTE or the 14, or for sure by the 7 DTE, the naked put's going to be gone unless the market has pulled way back and the put debit spread's in play and it's cranking out money, and the naked puts may be underwater. The whole position may be underwater, and it may be underwater with a few days to go. And that might be one of those where we have to pull out the Sweet Bobby playbook, where we look at the 7 seconds and we figure out what we want to do to defend that trade. But 90 whatever percent of the time, the naked put's going to be gone before the put debit spread matures. And that put debit spread is going to be sitting there worthless, not worth doing anything with. It's just going to run off the portfolio. It served its purpose. It has no more power to give. So there's monetary reason for diagonalizing. There's monetary reason for taking off the naked puts when they, quote, get cheap, unquote, which is a subjective thing. My cheap might be different from Dan's cheap, might be different from your cheap, Bobby. It's up to what each of us do. And what I'm trying to do is build it into the plan So I have delineated how I want to put a tranche on and how I want to take those pieces of the tranche off at the tail end. So when the cost is built in, it's not like I'm scratching my head or I got an itch today, I'm bored or I'm nervous or whatever. And so I'm going to take off these naked puts just because I feel like it. No, it's all part of the plan. So the cost is baked in. And that's another thing I said before, I'll say it again. When we pay for the put debit spread right off the bat in the trade, all we really want to make is the net credit of the tranche. Of course, we want to make the tent profit whenever possible. And of course, we want to make tent profit without the naked put being challenged, if you will. In other words, it'd be ideal if all our 112 tranches went until like 7 days DTE and the market tanked right into it. Because we could take a tanking right up to the naked put and still make a boatload of money. That's not the way it's going to work in general. So does that kind of answer your question?
Yeah.
About the diagonalizer?
Yeah, okay. Hey, Evan's got a quick question. Yeah, or comment.
Sorry, I threw my hand up a while ago and Ed was talking about different considerations when it comes to increasing buying power and your other metrics. I'd be curious to hear about some of the other people's experiences who have call positions on. But I know for me personally, looking at my metrics from this morning, I was at about, I think it was like 0.15% theta, only at 20% buying power. So I am able to keep enough gas in the tank with lower buying power. So I know that the risk with the call side, in your opinion, is that we just keep going up and up and up and we blow through the call side. But if you layer on a whole bunch of, say, put side positions and the market tanks, and you have 50% buying power, I think there's a different level of risk there. So we're kind of looking at two different kinds of risk. If I can do, 20% buying power versus your 50, and we're both at about the same theta rate, I would also argue that I'm a lot more delta neutral, right? Which is something you had mentioned earlier as being kind of an important thing for you. So I don't know, it just kind of came to mind when Ed was talking about the different levers that you can pull to change your metrics. But if anybody else has call side positions on, it'd be interesting to hear kind of what your ratios are looking like. So I know mine look pretty favorable, so I'm not sure if I'm just right place, right time or what.
Well, and that's the advantage that you have, that you're able to increase your theta without increasing your buying power. It's definitely a positive for you, Evan, because I'm looking for some positive deltas in my account. I'm putting on call debit spreads along with naked puts. Fancy. That's interesting. So we call that putting on call debits, but we call that a bull 111 or 112. Yeah. And that's even built into the spreadsheet. You can, characterize it as such. All right, guys, great discussion. We'll see the Muscadine Mafia and the Hello Ladies Gang at around 2 o'clock. See y'all later.